Okay. So once again, happy Sunday. Let's get into it. Last week we saw an incredible rally. We talked about anticipating gold buys, and 3,000 pips later, gold for sure bought. So let's talk about this bit by bit. Number one, um, this gap right here that opened on Sunday, it's been that long? Sheesh. Yeah. So this gap that opened on Sunday, the market came down to retest Friday. And that's the thing. Whenever we're trying to see if the market's going to respect the zone, we always have references like the last week, Thursday, Friday, into an area of demand. But the best entry really came down into the afternoon. Let me reset that real quick. The afternoon, because in New York it was a bit choppy, it was still consolidating. Had ourselves a break, a structure, retest by 9 p.m. Price started climbing up, came back to retest Asia in London. Price gave a break and retest once again, and then they started climbing up out of there. So we are anticipating a setup from a 4 hour structure, we got to expect price to play out within a couple of days. So Sunday afternoon entries going into this week as well, be very vigilant for that. Okay. Like you might see a pullback in New York that you don't like, but show up in Asia. See if Asia lows is retesting New York lows, New York 12 p.m. lows or New York morning lows. Those are some very, very sharp opportunities for good entry. Okay, so this very week, this is Friday's morning low, which was NFP. Um, NFP brought price all the way to hold on, let me go to my other chart. There it is. Yeah. NFP brought the market to a 4 hour high, and when I thought it was gonna break it, they actually retested the high and then and pulled back within this imbalanced candle. So here we are, brand new week, and we need to start scaling as of now. Okay, so I'm gonna open a position with my stop loss below 43.09 because we gotta scale this thing. We ain't gonna catch sniper entries all the time, but we gonna for sure be in these trades. We not missing out. If price by London shows up right back at 43.03, I'll definitely have a pending order there as well. I could tell the market 43.07, just gotta have these pending orders because just in case. Hey, happy Sunday. Happy Sunday. All right. I'm doing good. Hope you're doing well, Quells. Gonna add this position right there. Worst case scenario, price comes to sweep one more time or sweep Friday lows. That's fine. As long as we can see a sweep break and retest, we keep going. Mm, mm. Sleep is definitely gonna be calling your name. All right. So we got that. We got GA that we gonna pay attention to. We got GJ buys. It's gonna be a good week. So back to what I just said here, right?
Report of progress.
I got me a buy limit right around here, 4307. Chances are we got one, two, probably one more level of drop before they buy. So we just gonna keep an eye out. And as I said, to catch these beautiful moves that gold is gonna be given, we have to be willing to dollar cost average. Okay, let's head into the indices. Let's take it back from FOMC, shall we? So, as we talked about a few weeks ago, there is definitely a reason why we say time and time again that trading FOMC the day after on the Thursdays of post FOMC is a lot more clear for us to understand what's really going on. When we made it to this 4 hour high, price sold, but on Thursday, we saw that this was just a play to bring price at discount one more time. Okay. Now, last week, well, 2 weeks ago at this point, they retested that same area. Thursday retested Wednesday lows, and up and away it goes. Now, by New York, you'll notice many times, even on the next day, price will most likely give you the move, but around 11, right? You would probably be in these buys like I was, and this was for US30. Same play, but just want to show you guys. I remember for US30, I was in these buys, and many times you really want to see price rally. They're going to give you one last pullback, typically by 11, 11:30, even 12:30 before they rally. And it's like super disappointing sometimes. You're in the trade, you got a good entry, and then they take you out. But I want to let y'all know something. If price does that type of behavior and you look to your left and you notice price is just retesting London one more time, if you got stopped out, get right back in. Okay? Get right back in, especially around 11:30. 11:30, 12, 12:30. Okay, this is just a one last retest of London lows. Do not miss out on this rally. You will be sick. You will be sick. All right. Now, all this buying going on right now is because when we ended up having the FOMC results, what did we have? We had FOMC results as rates unchanged. The market, the Fed made their decision. They kept rates unchanged. And to be honest, I think they're probably going to do the same thing, or we might even be in for a surprise rate cut. Who knows? The reason why I'm saying that, hear me out. The reason why I'm saying this is because last year around this time, September 17th, 2025, July's rate cut was 4.50. So for September, they were anticipating 4.25. And guess what? They ended up cutting rates by September. That was the first time in a minute that they cut rates. And then the year before, July 2024, rates was at 5.50. On September 18, 2024, they cut the rates by 50 basis points. I'm really wondering if history gonna repeat itself. Yep, I'm really wondering if history is going to repeat itself. All right, so since December of 2025, we've been keeping rates unchanged. And along with that, we saw NFP's latest news on Friday. It ended up being very positive. Let's go ahead and talk about that. Unemployment rate, instead of 4.2, we're looking at 4.1%. So they're saying that the economy is actually not doing too bad with unemployment, right? So that is a sign that's a deflationary sign. All right. This is a disinflationary um, look for the market. So that tells the Fed, you know what? Maybe it is time we either keep the rates unchanged still, or maybe we might have a surprise rate cut. Okay. So this upcoming core CPI this week is going to determine that. Now, pay attention, guys. In July, we had a 4.2% instead of a 4.3. That was also a good look. This is 2 months in a row now where we're looking at unemployment rate, not too bad, not too shabby, not too shabby, supposedly, right? And then core CPI last month, we went from May 2026 at 0.4, April 0.2, June 0.2, July 0.0. What does core CPI remind us? It reminds us of how good are we doing as an economy when it comes to the price of goods, services, produce, stuff like that, right? Except for food and energy, right? So this accounts for how we're doing as an economy. Is inflation hot or is inflation cooling? Because we're seeing less than expected, that's a cooling sign. So because that's a cooling sign, that doesn't tell the Fed, "Oh, I need to increase interest rates." That doesn't give it enough evidence. So it's either we keep rates exactly where it's at, or we might be in for a surprise rate cut. Do you guys understand? Am I making it very simple to understand? Okay. So now what does that all mean? If rate cuts are in the works or we're keeping rates the same, well, no wonder the market comes back into discount into like a 4 hour demand here for US30, for gold, for Nas. And the market's like, well, if interest rates are not gonna rise, that's a good sign for investors. Interest rates are not gonna go up, they can still borrow. Inflation is cooling down. That's a good green sign. That's risk on for the market. So you tie that in with seasonality, and we're in August, we might end up seeing September if interest rates um, either remain the same or a surprise interest rate cut will send this market flying. So just remember that. And remember, in core CPI, you don't have to trade at 8:30. You really could give the market till 11 for you to find your entry. Case in point, last week when we were um, looking for an opportunity, I was begging Nas to give me the setup. I'm like, yo, don't be dumb. What did Nas do? Played in our face, gave us one more sweep by 11. Now, of course, we've been on the call since probably like 9 or 10, and we were just waiting for Price to give us a setup. But a lot of times, 11 a.m. be the time they really give the move after they give a sweep. So keep that in mind when you're trading and you're looking for your opportunities. Okay. Even on Friday, yep, even on Friday, the market came to retest Friday highs after NFP took off. That's another thing I wanted to talk about. So even I had to be a little, I had to go back into my own file to remember the sequence of NFP during bullish markets. So boom, 8:30 because the numbers came out less than expected, which is a good sign. The market took off right at 8:30. Okay? We call that one. The market took off. To catch a trade like that before it takes off, you got to just be willing to put the stop loss below London and see where it goes. You only got to be in that 8:30 to 8:45, 15 minutes because price usually pulls back. But where is it going to pull back to? Usually below London. That's where the liquidity and repricing area is. They sold off 10:15, price bought. And of course, by 11, we had another opportunity for a retest. And then they made it up to that recent high and then they pulled it back in again. So there are different ways we can catch these setups. We just got to be really locked in, right? Got to be really locked in. So it's 11 or 12:30. Those are your best times if you're not really confident at what the market is up to. So because we have good news, economic fundamentals are giving us green light opportunities. NFP is less than expected. Unemployment rate is actually not rising, it's lowering. So that means if we have high unemployment numbers, that means there's a high unemployment rate. If we have low unemployment numbers, that means there's actually less people unemployed, which is a good sign for US30 and Nas. So all of these things tell me that when we find these opportunities, we're definitely gonna capitalize on buys when price makes retracements. So this was Friday afternoon. Okay. Make sure I mark this 4 hour high here. That way I don't forget. So if London comes back to retest Asia or New York comes back to retest London, we'll be able to catch those buys and see how price runs. So let's check gold. Okay. All right, so damn, I gotta reactivate some of those auto messages. So, in the Signals VIP chat, I called GJ buys at 213.32. I'm expecting some form of pullback, but still, uh, very much looking forward to this buy. 15.79. Okay. So, yep, this is how the market is starting to look. Everything looks pretty easy going, and we'll see what happens. Okay. Yeah, so that's pretty much it. US 30. I don't think I spoke about US 30 as far as anticipations, right? Same situation. I think we're gonna be respecting this demand zone and then create a second leg and then take off. We might try it, reach Friday highs, pull back a little bit, and then buy and stuff. They might work. They might work. I know, right? Throwback GJ. Yeah, just paying attention to that GJ, man. I was like, okay. So on the back end, there's a lot going on with the Japanese yen, right? I'm not sure if you guys know. Let's let me see if funded by Scott. Thanks. That's a lie. God damn. Black and brown voters are shifting Republican.
Fake news.
Right. He tells all these news companies how much they're fake news, but he would just be lying just for fun. Golly,
Yeah, he believes in alternative facts, bro.
he does. Alternative facts. The fuck, bro. Crazy, bro. Okay, I came here looking for a summary on a Japanese bank. Oh, snap. I think I found it. Nope. Okay. Hmm. So remember I was just saying, the Fed's target range is 3.25 and yeah, there's got to be a way to manage Forex Factory better, man. Jeez. What did he say? We are low keying it. I don't know. Okay, let's do this. So there's some bank lending going on with JPY, 5.7%. Forecast was 5.8. Borrowing and spending positively correlated. Consumers tend to seek credit when they are confident in the future. All right. Let me read BOJ. Japan's economy has recovered moderately, although some weaknesses have been seen in partly due to impact of the situation in the Middle East. Yes. So Japan's economy is expected to continue growing moderately, albeit at a decelerated rate, supported by factors such as global AI related demand and various government measures. Now, Japan is one of the biggest investors in the US dollar. What does it say? The BOJ summary shows one member said the BOJ must pace up adjustment of monetary support as the cost of delaying a rate hike cannot be said to be small, with members urging normalization by raising the policy rate above the lower bound of the estimated neutral rate change. The one said it was appropriate to keep rates steady at this meeting event, given the lag from past hikes. Now, we might really do Japan a solid by just lowering interest rates so that they can buy more of our American dollar. Because If Japan's if Japan's money keeps being funny, it's definitely going to impact our stocks. So Japan is vital to the United States as its key strategic ally in the Pacific, serving as the cornerstone of U.S. military presence. Blah blah blah. That's not what I want to talk about. Okay. Japan ranks as one of the top global trading partners of the United States, importing massive amounts of cultural goods, blah, 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 blah. Japanese companies are a leading source of foreign direct investment in the U.S. economy, supporting hundreds of thousands of jobs. Yes, Japanese investors hold a substantial portion of U.S. Treasury securities, U.S. backed securities. So I want to get deeper into this. Yes, there it is. Japan is important to US because it is a massively holder of American government debt, a major driver of global liquidity through the yen carry trade, and a core economic partner whose currency stability directly influences Wall Street volatility and US borrowing costs. That's it right there. So now the US Treasury Holdings, Japan holds 1.1 trillion in US government debt. If Japan sells these assets to defend its currency, it can spike US bond yields and increase domestic borrowing costs. Investors borrow cheaply in Japanese yen to fund high yielding investments like US tech. Let's speak English. So Japan is the plug. It's like it's like your mama who holds your wallet and she has most of your money. She's been saving for you for a rainy day. If your mama dies or some situation happens, God forbid, then you're in trouble. That's the relationship between the US and Japan. So now the Japanese economy has done a great job of like keeping their interest rates low. So that way it's so low that the US could actually invest in them and so that they could bring a lot of their money into US stocks at discount. They're using their money to leverage it at discount. Now, if this plan does somehow backfire, what's going to happen is they might raise their interest rates just a little bit, which is not good for the economy of the Japanese. Now, 7 days ago, the US stepped in after decades of to prop up Japan's yen. This is what's at stake. I hope this doesn't make me pay. So the yen slid past 163 per dollar last Thursday before rebounding to 157. That's the US. The where's trading view? USD yen. So we dropped right here. We just came from 163. This sell off right here was definitely not just manipulation, right? This was the US intervening. So they had to sell. Now, we're looking at 552 pips in swings. This is why I'm wondering if we're going to increase interest rates on the next FOMC or decrease interest rates, but somehow or keep it the same and then still the USD JPY like slowly rises. You know, I'm very curious to see how that plays out. But let's go ahead and check gold right now. Okay, gold buys is doing well. Nice. Very nice. Still kind of playing around GA. But yeah, back to the Japanese yen, right? Washington's decision to join Japan in supporting the battered yen has prompted questions over what motivated the rare coordinated intervention, with analysts pointing to concerns over U.S. Treasury markets and Japan's financial system. Tokyo has grown increasingly weary of the yen's decline, which recently dropped to its weakest level against the dollar in nearly 4 decades. Golly. The yen had been hovering at multi-decade lows, sliding to, love that word, to 163.73 per dollar last Thursday before rebounding to 157 on Friday. The coordinated intervention was the US Japan joint operation to buy yen since 1998 and the first coordinated intervention involving the two countries since G7 acted to weaken the yen after the 2011 earthquake. So industry veterans told CNBC that one of Washington's biggest concerns was avoiding a scenario where Japan would need to dump large quantities of treasuries, of US treasuries, to finance unilateral intervention, given how the North Asian nation is the largest foreign holder of US government debt. Can you imagine being Japanese and an uneducated American is just looking down at them or talking crazy about their culture? Meanwhile, they the largest holders of their debt. Oh man. Can you imagine talking crazy about immigrants and they got that type of leverage over you? Let's keep going. So this is one of the main reasons why keeping from this intervention is why the dollar, the United States intervened. Now, what I want to know is could this kind of be the catalyst in the Fed decision? That's what I really need to know. But either way, we're going to find out on Wednesday what core CPI is. Washington's most likely concerns Washington's concerns likely extend beyond the yen. A persistently weak yen could trigger further selling in Japanese government bonds. Hmm. With higher yields spilling over into the global bonds market at a time when both Japan and US are grappling with rising long-term borrowing costs. So that puts pressure on the Fed. Oh, let me not get ahead of myself. Highlighting access to the Fed's female repo tells markets Japan can raise dollar liquidity without selling treasuries. Oh, yep. That MOF. What is MOF? What is MOF? No. That's what it is. Oh, huh. Oh, it's the Ministry of Finance. The Ministry of Finance is the primary government department of or executive agency in many nations, such as Japan, South Korea, and other global economies, responsible for managing a country's public finances. Wow. Fiscal policy, budgeting, revenue collection, and national debt. Interesting. The responsibilities of the MOF: fiscal policy formulation, designing nationals tax structures, and coordinating. Okay, okay. I learned something new today. I can't even lie. Ministry of Finance. Interesting. Okay, so concerns that the Ministry of Finance intervention could pressure U.S. funding markets through short and U.S. Treasury sales. Uh-huh. And how would we get U.S. Treasury sales, guys? By decreasing interest rates. Hmm. I'm sorry, I'm a nerd, guys. Short and U.S. How would the U.S. do that? To short end UST means the U.S. Treasury alters its debt issuance strategy to rely heavily on the short end of the yield curve. This means funding the government's budget deficit will drive using short term to actually freezing, reducing the issuance of long term. The U.S. executes this tactical shift through specific operational maneuvers, tilting the quarterly refunding announcement, flooding the market with T bills. Okay. Squeezing cash from the Federal Reserve when the U.S. heavily short issues short-term debt, it strategically targets pools of capital parked at the Federal Reserve. Money market funds hold vast amounts of cash in the Fed's overnight repurchase reserve repurchase facility. Oh my God. Yo, you remember how I've been telling y'all the next day when the market retests a zone is because there's repurchasing happening at the demand, at the discount. So that's why, like, let's say on a Wednesday, FOMC comes in, boom, we sell off towards demand. But then the next day, there's enough money to be pushing this thing back up. And y'all probably be wondering, like, where do they get all that money? Overnight reserve repurchase. That's what happens. Hmm. By issuing a massive supply of high yielding T bills, the Treasury coaxes money market funds to pull their cash out of the Fed's RRP and buy the newly issued short end government debt instead. This effectively injects trapped liquidity back into the financial system without forcing commercial banks to deplete their own reserves. Voila. So I think we're probably just going to keep rates the same then, if that's the case. Yeah. If not, then a 0.25 interest rate drop, just so they can pull this stunt. Hmm.
Think we're setting up to sell on gold.
Really? 1 second. Uh-huh. Okay. That's interesting. Oh. Oh. Hmm. This is interesting. All right.
Maybe down to that 4,300.
Mm, let me go to the 1 hour. Let me drop down to the M1. We're probably just gonna retest this area. But if you are in some buys and you want to close out, that would be wise. This is one of them situations, Brother Dan, where the stop loss will have to be where it's at. We can't just get out. The structure hasn't even shifted yet for more than likely we're probably heading back into these current highs first, but we'll see. The stop loss below 43.13 would make sense before we even start to change bias. Price would have to go below um this low that they just created when the market just started.
Somebody said all the Nas100 just said. Why is it buying?
Eh, started with who? Call them out. Okay. We'll close it out like that just to keep us from staring at the charts too long. If price does sell off, it doesn't completely mean we're like absolutely selling. They have to go through Friday's low first. They'd have to really break it. And if we, go a lot lower than this, then cool. No big deal. We'll see how price plays out. Um, as far as tomorrow, let's see if they still kind of playing around, but we're gonna show up, see what the market is giving us, and then we'll go from there. All right. Okay. That's it for tonight, guys.
All righty, man. Thanks a lot, Hans.
No problem.
Thank you, Hans.
See you on the chat. Good night. Good night, Quells. Good night, Sandra.
Bye.
Good night, Jerome. Good morning, Asante.
Nah, my guy. See you
Yes,
tomorrow.
sir. Much love, bro.